Good morning. Given the kind of announcements that have been made on this podium before, it's not surprising that Reliance's AGM yesterday was an action-packed affair, with the former oil to chemicals major announcing that it had managed to get Google to invest $4.5 billion in it. Google, in fact, is the 14th investor that Reliance has managed to get in the last 13 weeks. But since Reliance chairman Mukesh Ambani said yesterday there was a delay in the Aramco deal, in fact it was supposed to be concluded by last March, there was a delay in the Aramco deal, the share price of Reliance actually fell by 4% despite the slew of announcements made at the AGM yesterday. With Google's $4.5 billion, Reliance Jio has raised about 150,000 crores in the last few months, and if you include its rights issue, it has raised over 2.1 lakh crore, which is really a kind of history when it comes to capital raising in the Indian capital market, and it's probably some kind of a world record as well. The Google deal and the Google phone, when it happens, will help Reliance manufacture affordable entry-level smartphones, and if that works the way it's planned, this should upgrade about 250 to 300 million 2G users and be able to get them on Reliance's platform. So what that will do is that Reliance will improve its ARPU as well as the data usage per customer. In fact, while most people scoffed at Reliance when they came out of the Jio phone, going by the numbers announced by Mukesh Ambani yesterday, there are 100 million users, there are 100 million people who are using Jio phones there. So these are people who would never have the money to be able to afford a new handset, to be able to come on a 4G network and experience the data that Reliance is giving them. So the Google phone, if it's cheap and if it works well, will allow these users to upgrade their user experience and obviously pay Reliance a lot more. This is critical because though Bharti Airtel has less customers than Reliance, right now Bharti Airtel gets a lot more money from its customers. So Bharti has an ARPU, an average revenue per user, of 154 rupees a month versus Jio's 131, and that's because the average user on a Bharti network uses about 14 GB of data a month versus Jio's 11 GB. And Google will obviously benefit from the fact that it will be able to get 200 to 300 more million users in one of the world's largest markets when it comes to population. And as we said yesterday, as analysts at Credit Suisse have said that they're looking at a 2300 rupees share price for Reliance if all the moves that the company has announced on health tech, on edutech and things like that pay off. By the way, around 300 rupees of this 290 to be exact was predicated on the Aramco deal taking place on time. Just to give you a sense of how much money Reliance can make if things pay off, Alibaba has a health portal, a health subsidiary, Ali Health, and Ali Health alone is worth about $38 billion. If you look at Byju's in India, the education portal, Byju's is worth about $10.5 billion. So there's a lot more money that Reliance can make if it is able to get a leadership role in these new areas. If you go by Credit Suisse, around 138 or 140 rupees can be added to its share price by virtue of the retail operations taking off. And what will work to Reliance's advantage here is that its competitors, like whether it's Walmart or whether it's Amazon, there are a lot of restrictions on their operations right now, thanks to the FDI policy being what it is. The flip side of this, of course, is that for India, these restrictions make it an unlevel playing field for investors, and that's not really a good thing. So sooner rather than later, India will have to level the playing field between foreign and Indian investors. And what has to be great news for environmentalists across the country and the world, Reliance has said that it plans to be carbon neutral by 2035. Moving on from Reliance, in another big piece of news, Air India has said that it plans to send a section of employees home on leave without pay to stem its losses. The leave without pay can be between 6 months to 5 years. Now a lot really depends on how many workers Air India chooses to send home. Right now Air India's daily losses are about 35 crore rupees, and since privatization is clearly not is a no-hoper right now, measures such as these, and if implemented aggressively, are really what India requires, because otherwise the taxpayer is going to be saddled with the bleeding Air India for a very, very long time to come. As we've been arguing in the print version of the Financial Express, the government lost a big chance a few years ago, when the first time around, when it decided to privatize Air India, when it did not take over all the debt of the airline, and when it did not do a VRS. In fact, this is the problem with not taking decisions at the right time. And as we've seen, this is something which the government doesn't seem to have learned enough. Its refusal to, for example, move on the telecom policy for over 6 years now is testimony to that. It realizes there's a problem, but it is sort of timid when it comes to taking big, bold steps, which is ironic, because if there's one thing the Modi government was given credit for, even before it came to power, it was that this will not be a government that is timid at all. It is a government which is going to be bold. There's good news on the corona vaccine front. Moderna's phase 1 trials, the company has reported, have shown that the coronavirus is quite safe and it induces the correct immune response. In what has to be fantastic news for Indian students who were in danger of having to come back from the United States after the government said that anybody attending a university that didn't hold offline classes would have to come home. So what has happened is that a lot of US universities threatened to sue, in fact went to court against the Donald Trump government, and yesterday the Trump government reversed that decision. Now that's great news for those students who don't have to come home, but to be honest, it was to be expected. Indian students alone spend about $5 to $6 billion every year in tuition fees in the United States. So if US universities are earning anywhere between $15 to $20 billion from foreign students, the last thing that the government wanted to do would be to jeopardize that. You can't make America great if you're going to take $15 to $20 billion of annual revenues away from American universities. Thank you. Have a great day. Bye-bye.